Hi everyone, in this video I'm going to do a financial statement analysis of Palantir stock. We're going to go through the company's balance sheet, its income statement, and its statement of cash flows and look at what's been going on in the company compared to the previous year. Now this is for the period ending September 30th. It's the most latest figures available from Palantir right now, so let's get right into it. Starting with the balance sheet, and what I have highlighted here first is the company's cash and equivalents balance. It has $2.4 billion of cash on hand. That was up from 2.29 billion as of December 31st. Now, while it's always nice to have cash on hand, this amount of cash is a bit extreme for Palantir because of the scale of the business. It has, in my opinion, too much cash that's just sitting there. It would be more beneficial to shareholders if Palantir would either use these cash assets to invest in the business or return some of this cash to shareholders through maybe a stock buyback. It's just money sitting there and it's not being used. Investors could use that money investing in another company or doing something else with the cash rather than letting it just sit in Palantir's bank accounts. It did start investing, but look at the small scale. It increased its investment in property and equipment to 57.8 million. This was up from 31 million in the same period the prior year. But look at the difference between how much cash it has and how much it's investing in property and equipment. It's just not at a scale that is relatable to how much cash it has on hand. The company doesn't have very much debt, and debt is not a problem. No long-term debt here. Total liabilities of 932 million was down from 956 million, and the total current liabilities is pretty much in line or a little bit higher than the total current assets if we exclude the cash. And so again, reiterating my point that it doesn't really need to have all this cash on hand. Doesn't have long-term debt that it needs to be concerned with. Doesn't have too much liabilities that it needs to be concerned with. It can easily return 500 million or $1 billion to shareholders without putting the company at very much risk. The next statement I have here is its income statement, and starting what I have highlighted here, revenue. Revenue increased from 392 million in the previous quarter last year that ended in September 30th compared to this year's quarter that ended on September 30th. It had revenue of 477 million. So modest increase in revenue growth in its most recent quarter compared to last year. And then if you look at the most recent 9 months ended September 30th, revenue of 1.4 billion compared to revenue of 1.1 billion. Again, modest revenue growth from Palantir here. What was impressive, what is impressive, is that it was controlling its cost very well. Total operating expenses increased to 432 million, 432.4 million. This was up modestly from 397.2 million in the same quarter the prior year. And if you look at the most recent 9 months, total operating expenses of 1.236 billion was only up slightly from 1.20 billion in the same quarter the prior year. This is in stark contrast to a lot of the tech companies that I follow. They've all been on a hiring spree and increasing in costs, and they've all begun to announce layoffs and controlling costs just recently. But Palantir has done a good job controlling its cost already, and when it updates investors for its fourth quarter, I suspect it will continue to have moderate cost increases. Still, despite those efforts controlling costs, the company is losing money from operations, although the loss improved. In the most recent quarter, it lost 62 million in operations. That was an improvement from losing 91.9 million in operations in the same quarter the prior year. And if you look at some of my other videos on Palantir, you will have noticed what I've also pointed out, that it's done an excellent job over the years in demonstrating economies in scale. As its revenues have grown, its losses on the bottom line are shrinking and its cash flow from operations are increasing. So it's demonstrating progress even though it's still in the red in terms of the bottom line profit. You could see here net loss increased to 123.9 million from a loss of 102 million in the same quarter the prior year. And if you look at the most recent 9 months, a net loss of 404 million compared to a net loss of 364 million in the same quarter the prior year, mostly due to a one-time expense here, it looks like, of other income that's weighing on its profitability. Because if we look at loss from operations, it is showing improvement. You look at the most recent quarter, improved from last year. You look at the most recent 9 months, it also improved from last year. All right, and the final thing we will look at, the final income statement, the financial statement we'll look at, is the cash flow statement. And in the 9 months ended September 30th, 2022, Palantir generated 144.9 million in cash from operating activities. This was lower compared to 240.4 million in the same time the prior year, due to number one, a bigger net loss. However, the company did improve. It lowered its stock-based compensation expense from 611 million to 435 million. However, this unrealized loss from marketable securities of 260.7 million was a big increase from a loss of just 7 million in the same period the prior year. And so that is weighing on the company's net cash from operating activities. Overall, though, longer term, when you look at Palantir, like I mentioned earlier, it's showing good progress in increasing its cash flow from operations as it is increasing revenue. So that's all I've got for this financial statement analysis for Palantir. It reiterates what I've shown in other videos on my channel, in that yes, Palantir is losing money on the bottom line, but at the same time it's demonstrating progress in controlling costs while its revenues are growing, and thereby demonstrating economies in scale. If it continues at this pace, it will only be a matter of time before the company does reach profitability, something investors have been waiting for nearly 2 decades now. All right, as always, I truly appreciate you tuning into my videos. I really, really value your viewership. I hope you'll see me next time for another video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.